Hey everybody, thanks for tuning in to our latest Money Mathematics episode. Today, we're going to be comparing and contrasting two different ways to get a baby girl through school, our daughters. So I'm going to play the dad who's going to use a banking policy to get his baby girl through school.
And I'm going to be the dad who uses a 529 plan. Now, we're real dads here. So my girl is currently 6. Yours is just an infant. So let's split the difference and let's say 4. How about 4 years old?
Cool, we'll start at 4.
Okay, to be on the same page, let's contribute the same amount of money. What should you say it should be?
Why don't we do something easy, something everybody relates to, like $250 a month?
Deal.
Cool. Okay, so we'll do $250 a month. Now we got to set some ground rules.
Okay.
The rule is we're going straight until they're 18 years old, ready to go to school. We're not going to try to spend any money in advance. We're not going to jump in there to buy the new car or anything like that. That money is getting saved straight till school. Again, I'm using a banking policy. You're going to use a 529.
And it's very important to understand, ladies and gentlemen, that 529 plans differ from state to state. However, we're just using this as a generic. Any different 529 plan you want to use. Plus, you're not limited to your own state. Okay?
Cool.
So $250 is going into my favorite 529 plan for my daughter.
Cool. All right. So we got to talk about something right off the bat.
Okay.
In the banking policy where I'm going to put my money, I've got some guaranteed growth. Do you have anything like that?
Well, in my 529, we've had a great track record of growth, but I cannot guarantee growth.
Okay, but a good track record.
Good track record.
That's promising. Okay, well, I've got guarantees, so I'm gonna use mine for sure.
Whatever.
What about like contribution limits? I don't have any of those. I can put in as little or as much as I want to. Like maybe if I have a bad month or something, I can drop it down or come back to it. Things like that. Do you have any?
Good point.
Limits?
Okay. So actually, no, in most senses.
Okay.
So based on my family's income, as long as it's not too high, 99% of people fit into it.
Okay.
No contribution limits either, as long as I don't put too much and we get into things like gift taxes.
Okay.
So pretty much for the average family, no contributions either.
Okay, no problem.
No contribution limits.
Sure. At the Cash Compound, we have a couple of things that are like super important to us. So we talk about them all the time, taxes, fees, and withdrawals. So I want to talk about those. So let's just start with taxes. I don't have taxes where I come from. When I'm ready to take that money out for school when she's 18, I don't have any taxes. Do you have any taxes going on?
Good question. We're both putting in after-tax dollars into our programs. 99% of the cases, and I also am not taxed on the growth, kind of like a Roth IRA.
Okay, cool. That's good. What about fees? I don't have any fees going on when I go to withdraw the money or anything like that.
You don't have anything so far. Well, okay. So for me, I don't have them as long as when I take our withdrawals, we're using them for qualified educational purposes and purchases.
Yep.
So as long as they are strictly for education, then I'm cool.
Okay, no problem. What about withdrawals? Like, is it? I don't really do withdrawals. So the issue with withdrawals is that if you have to withdraw the money, then it's not growing anymore. It's not earning. So if I had to, now I know we promised we're not going to do it until they go to school, but if I had to do that, I still actually am going to earn my guaranteed growth. What about?
Okay, no. If I actually withdraw, I know you can take loans over there you keep talking about, but if I withdraw my dollars, there's nothing left in there, and of course, I'll even have penalties.
Okay. That's not that great.
It's all right so far.
Okay, no problem. What about this? This is a big one. What if your daughter doesn't want to go to school? What if she wants to join the military or something?
Good call. Okay, because the way my girl's growing up, she might get that scholarship.
Okay.
And if that is the case, if she's not going to school, one thing I can do is I can change the beneficiary of the 529 plan to a different kid.
Okay.
Or even myself if I want to go back and take some classes. So I can change the beneficiary if my daughter is going off to the military, doesn't need that money, or she's got a scholarship. I can take my cost basis, what I've contributed, back out, and I'm going to be taxed on the growth. But I still get my money back.
Okay, no problem. What I'm saying, what if she doesn't want to go to school? I know you said you can transfer the who can get the money, but I mean, by then you'll be old. That's like 18 years from now.
Look, I won't be that old. I'm going to take a class online.
Okay.
I can use it for myself.
Well, what if you have a bunch of money in there by that time and you only want to take one class?
It's an expensive class. Okay, you're right. If my daughter is not going to use it, then I do have to manipulate the program completely.
Oh, okay. That's tough. Okay, no problem. What about What can you keep it going after college? Like if you're earning good interest on it, can you keep it going after school to keep earning?
Not really, because I still have to use it for qualified educational purposes.
Okay. Well, you probably are getting this, but I can keep mine going if I wanted to. And, even after she goes to school. And of course, if she decides she doesn't want to go to school, I don't have those parameters where I have to take a class. I think I'm done, everybody. I don't want to take any more. So I don't have to do anything like that. So if she didn't want to go to school or she got a scholarship, we could take the money out and do something nice for her or do something else. All
I'm saying is leaders or readers, we're going to keep reading in my side of the equation.
Okay. No problem. Well, let's just jump to it then. Let's say that the baby girls, they went from 4 to 18. We stayed true and consistent. We put $250 a month into those plans, mine into a banking system, yours to a 529. We did that for, what is that?
14 years.
Cool. So how much have we put in?
Assumedly, let's go ahead and compare apples to apples and give ourselves the same amount of growth.
Cool.
Okay, so that growth over the course of time was 4%.
Yep.
That's kind of conservative because sometimes mine can go a little bit higher than that.
But can it also go down?
It can. That's true. It could go down, but we've got a good track record.
Okay.
So at a 4% growth, that is a total of a $42,000 contribution from our families.
Yep.
So each.
Yep.
So a 4% growth, that means that I've got $56,000 waiting for my little girl to go to school.
All right, not bad. So at the same 14 years, we started together. I chose to use a banking policy, a banking system set up the right way instead of the 529. We both put in $250 a month. See, when I get to that year 18 mark where my daughter wants to go to school, not only do I have the cash value that my policy has generated over this time, but I can also take out my cost basis. I can actually take out everything I put in over that 14 years too.
Wait, you're telling me, so I put 42 in and it grew another 14,000.
Right.
But you're telling me that you can actually use your cash value and what that's grown to.
Yep.
And we know that that's going to be at least what you put in plus what you actually put in.
Yeah, I can actually take out what I put in as well. If that's what we're going to do, that's what we agreed to, right? We're using the money to pay for school. So when she's ready to go to school, I'm not only going to have access to the cash, but I'll just stop contributing because that's what we said, right?
Yeah,
I guess you're going to stop. So
I'm going to stop.
I want to make it even.
So you stop too.
So if I stop, I'm definitely going to take out my cost base is what I put in. So when she goes to school, I actually have 86,000.
86,000.
Yeah.
Okay, so to my 56. Okay.
Yeah.
Well, that is interesting, especially, ladies and gentlemen, that we know that the educational costs are even rising all the time, wherever we're going, and they're rising way faster than inflation. So you can see right there, for those of you who are looking at us on the screen, you can see the difference just in one type of transaction, saving for your kids' educational experiences.
Yeah.
So while there are all sorts of wonderful things that the government is allowing you to do with 529s in your income, we're outside of the realm of government experience and taxation and all those quote unquote qualifications for something like a banking policy.
Right. And I want to bring up one more thing. I meant to ask it, but what happens if like something happens to your daughter? Do they give you like all the money that you were putting in the 529 back and like a parting gift? Because you were contributing, but she wasn't able to go to school because something happened to her?
You just, look, this conversation's over. Okay. Stop asking me questions.
Well, I just didn't want you to forget that if something happens to my daughter, like our family, we'd get the death benefit because that's attached to it. So, and that death benefit when she was, 18 was about $700,000 as well, just in case. I mean, it's going to keep going up if I wanted to keep the policy going, which I might as well.
You might. We said we were going to stop it. All right, take your money and go home.
All right,
the conversation's over. Ladies and gentlemen, if you need to know more about what we're doing and helping people understand some of the contradictions that are in your mind around is this possible and how can this happen for us, there's a lot of wonderful things about growing your wealth and cracking the code to cash flow inside the vaults of the Cash Compound. We'll see you next time.